Yeah. All right, Farhan is here. Hi, bro. Yeah, so that's what I mean. Like, don't be a forever student. You have to like go into the chat and see it for yourself. You have to like spot what you will be able to see. So, as an introduction, my name is Khalifa, also known as MH2 Khalifa. Yeah, I've been trading the financial market for like 1.5 year now, close to 2 years. And I was mentored by Michael Hudson, who is also known as ICT, the inner cycle trader. So I stopped being a forever student and dived into learning and discovering the market myself. Because ICT has bunch of informations that are relevant and some ones are irrelevant. So he is very bad at teaching. He talks too much and stuff like that. He can talk for like good 7 hours, 10 hours, I think. And the only info that he wants that you pick from that video is like not up to 5 minutes or something like that. Maybe he wants to explain something and it will take him like 3 hours to 4 hours. He will throw in a bit information. He will talk something that is important, then he will dive into another topic again, explaining maybe his relationship and stuff like that. So you get lost whenever you are learning from ICT. So what I was able to do is I forced myself and pick all the things that he taught because there are a lot of concepts and modules that ICT showed us. So I went into the chat, I unlearned some of the things because they are like 30 or 40 PD arrays that I
Student and I dive into learning and discovering a market myself. And
oh,
one repetitive pattern which I'm going to show you right here.
I speaking, bro. Yeah, I can hear you. So all the information here is based on my research, and you can't even expect to learn and master it in a couple of weeks or something like that. So now there are some things that I want put in this technical analysis bootcamp because it's actually basic class, but not like basic to like a pip because I understand like all of you know what a pip is and stop loss, all those terminologies you get stop loss, take profit and stuff like that. So the first topic that we have here is market structure, which is the first class. And this is like the basic market structure that you know that is put out there in the internet. Like you see it, it looks so perfect. You get, you said a ranging market, you see price ranging in one side, and you see the upper line there, which is a resistance level, and the one lower, which is a support level. And what did they say on the internet? They said sell when price is on a resistance and buy when price is on a support. And whenever you go into the chart and try to replicate that same thing that they showed you on the internet, you will get stopped out. They will just take your money and go. And the market will then go in your favor. And the other one is trending market. So ranging market is a type of market that is hold in one place. It just keeps moving in one place. It's like what I call time distortion. What time distortion means is that when it's not the time for price to move. Price will be in a range. When supply and demand is efficient, you get, when both sides of the market is efficient, market will not move. So that's when you see market staying in one place. There has to be an external factor that will cause that market to move from point A to point B. So whenever market is ranging, all you have to do as a smart money trader, because dumb monies will be in that ranging market, try to trade off every key level that they see. That's support level, the resistance level. They will be in there trying to trade everything that they see there. But you as a smart money trader, all you have to do is to wait for a breakout. Once you see that breakout, then comes a breakout. The first breakout is a breakout. Then you have the real move, which will be the expansion out of that range. And yeah, that's when you get involved with the market. But when market is ranging, you don't have anything to do. Like you don't have a tool to use in that type of market condition. You don't have that type of tool in your arsenal. And the other one is the trending market, the higher high, higher low, higher high, higher low, which means that market is moving from point A to point B. But it's not moving in one leg. Like it's not moving, like market can't move from point A to point B one time. If you see that, because you can see this leg here, market move from point A to point B with speed. When that happens, that is an imbalance. There is an imbalance in that price action here. So the market will have to trade back to fix, to rebalance that imbalance that is here. Then you have another expansion again. So this is called a trending market. And a trending market, we see a trending market is when supply is maybe lesser than demand, or demand is lesser than supply. Maybe we have more supply than demand, or we have more demand than supply in the price level. That's what a trending market is. So if market is not trending, it means that the supply and demand are, they're in one place, like in agreement. That's when you see the ranging market. This is the type of basic market structure that we see everywhere. You get. But when we go deep into the trending market, because you can't trade the ranging market. We want to see the trending market. You want to be in the trending market. So that's the one that is very important to us. So we have bullish structure, which is higher high, higher low, higher high, and a higher low. You see market keeps breaking highs, going to the upside. It keeps breaking highs. It violates this high first. This is the expansion. It then trades down. It then expand again, violates this high, creating what? A new higher high. So you can see that it's creating higher highs, then creating what? A higher low. This low is higher than this one here. So that's when this one is high. Then it has what? It breaks again to the upside, creating another higher high. Then trades down. Then another expansion again. So this one here tells you that the trend is an uptrend. You don't need to put a trend line or something. You don't need a trend line. Once you see price breaking highs to the upside, that tells you that it is an uptrend. You can see it by making higher highs and higher lows. The lows are protected no matter what. The lows will be protected until price gets to a certain key level. Once the price gets to a certain key level, that's when, if it wants to change direction, you will now see a low being violated. Then that tells you that, okay, now the trend is over and we'll start going to the downside. So the downtrend is called bearish structure, which you have lower high, lower low, a lower high and a lower low, a lower high and a lower low. You can see the expansion to the downside creating this low, then another expansion to the upside creating a lower high. So this high here is lower than this one. So this becomes a lower high. Then we have another expansion to the downside, a lower low. Then what? A lower high. So in this bearish trending market, you see that we are violating lows. The lows are being violated, but the highs stay intact. The high stays intact. Nothing is touching the highs. It stays intact. You want to see the lows violating. You want to see price violating these lows here. So whenever you see price violate a low to the downside, that tells you that you expect another low to be violated. So you wait for price to come down, then you find your entry around this here for the price to what? To break another low to the downside. You just want to find continuation because it's a bearish trend. So you can't come here and start trading and start looking for buy signals. You only want to join this sell because what? They say the trend is your friend. That's actually true. But the trend is not your friend when the trend is on a key level. When it reaches a higher time frame key level, then the trend is no more your friend. So let me share my screen to trading view and I'll show you what it looks like on the chart. And yeah, just go stop out here. All right. So you can see this now. When price is at this level, what happened? Before price gets to this level, there is a higher time frame key level to the right and to the left side. But look at what price is doing. You have this low here, this high here. You have this high here, but what? Price violated the high. That high got violated right here. That is a higher high. It created what? It created a higher high. This high is higher than this one. So you have a new high now. You have a new high here, and this one becomes your higher and your lower high. This one here. Sorry, this one becomes your higher high. Because oh, this high here is higher than this one. Price did what again? Price broke this high with this candle here. That there is a higher high. Then what? To create what? A higher low right here. Price then trades up again one more time, breaking this high again, creating what? Another higher high. Then what? You have the higher low again. So you can see that this low here is higher than this one. And if I put something like this, like this, like this, like this, sorry. Higher high, higher low, higher high. Then what? We have higher low, and we have what? A new high. Sorry, here. We have this new high, and we have what? Yeah, another low being created. Then price did what? Price violated this high again, right here. As it violated that high, we have what? Our low here again. We have that low there. So now, if I drag this to the left, to this side, this is how the market is. You get breaking highs. Consider it breaking highs. So what you see on the chart on the internet, that shows like it's very perfect. It's moving like this, like this, like this. It's not actually this perfect. It's actually not this perfect. You get what? You will get a low being run out. Then price will what? Will continue going high again. Will continue breaking structure to the upside. To the upside. Price will sweep this high. Sweep this low again. Then you see price going higher again. These are what? These are the smart money. They showed you this type of pattern here that makes it look very clean. And they say, and they be like, okay, you buy here, you buy here, you buy here, you buy here to be in line with this trend. But what tends to happen is when you buy here, price will now what? Price will now trade down and stop you out. It will stop you out, then continue moving high again, continue breaking highs. Make another low again, continue breaking high. Then what? You go long here, then price will what? Price will then trade down, stop you out. So you see what? You are becoming liquidity. You are then becoming liquidity. They use your money to what? To expand to the upside. Because if they are selling, then they need counterparties to sell to. If they are buying, they need counterparties to buy from. You get? So if you buy around this level, if you bought here, you bought price at this level, you bought it cheap, right? So what tends to happen is you bought it at this level, which is cheaper. So price will go up, then what? They will stop you out. Because if you bought here, your stop loss will be right here, something like that. So they will stop you out, forcing you to what? To exit your position in a loss. They will force you to sell it cheap. So they will buy it cheap here. They will now what? They are willing buyers here. They are willing buyers here. They will now sell it to those buyers expensive. That's basically what the market do. They buy cheap, sell expensive. Buy cheap, sell expensive. Buy cheap, sell expensive. But what? They told you that whenever price creates a low, you buy from there so that price will continue moving to the upside. That's what they said. Now price created this low here. Price created a low here. You went long here. What happened? Price started going high. Then what? It came down, stopped you out right here. It stopped you out. Then what? Expand. Look at the speed after stopping you out. It stopped you out, then what? Expanded to the upside. So they forced what? They force you to sell it to them cheap around here. So the loss is now yours. You will not take the loss. They don't ever lose. They will now what? They now have willing buyers at this level to sell to. So when price came here, they exchanged orders here, they paid orders and sold some orders here. This is why you see this trending, this bearish candle. Then what? They still bought it low, then expanded again. Trade high, drop down, then what? Expanded again, keeps breaking highs. That it tells you that this trend here is a bullish trend. But what? Look at the lows here. This is the low, this low here, this low, this low, these lows are protected. So this is the last low. This is the last low before that high. That there is the last low before that high. Then look what happened. That low got violated. Immediately that low got violated, that tells you that the uptrend is over. But this is a major low. It tells you that the uptrend is over because they put a lot of money here to buy cheap, to then sell expensive right here. So there's a lot of money being bought here to break this high. Because for them to break this high here, it means that they have to be like more demand. So they have to put a lot of money and less supply here. If they are buying here, so if they are offering price here, you get willing sellers at this level, they are willing sellers at this highs here. people that want to sell. But if the money is not enough, we have buyers here, the institutions, they bought here, but the money up on this high here is not enough. So what do you see here? If you have less supply and more demand, price will keep going higher. That's what it is. That's economics 101. And that's exactly how market mechanics is. That's exactly what it is. So this low here got violated here. Then what? It trades higher again. Creating what? It now started creating higher highs, higher low. Higher highs, higher low. You can see it. Higher high. Then what? That low got violated. Then what? Lower high, which is lower than this high. Lower low, which is lower than this low. Lower high, lower low. Lower high, lower low. You see how it keeps breaking lows. Then what? This high got violated again. Then you start seeing what? You start seeing higher high. You now expect a higher low, another higher high. What happened again? Run through all these lows there. Stop them out. Then what? Started creating higher high, higher low, and lower high, lower low, lower high, lower low. Then what? Price violated this high. That is a stop hunt. Then what? It created another lower low. That's how market moves. It doesn't move the way they show you here. It doesn't move like this. It doesn't move perfectly like this. That's not how market moves. So how do you identify if a market is a trending, what we call institutional order flow? How to identify institutional order flow? By looking at price action, by looking at the chart, you will see that your bullish candles will be used as a resistance level. You'll be seeing that every bullish candle, then a bearish candle would be used as a resistance for price to go lower. I'll show you what I mean. Like, if you want to identify a bullish institutional order flow, by just looking at higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, you can tell that this price is uptrend. You can't buy, you don't even have to put a trend line or something like that. For down closed candles, what I mean by down closed candles, I mean bearish candles. A candle that opens up high, then closed low. That is a down closed candles. So down closed candles are to support price to the upside. And up closed candles are to be broken. This is what I mean. This is what I mean. You see, in this case, my up close candles are the green candles. They are the candles that opens here and closes here. But look at this. Whenever price created, this here is an up close candle. What did price do? It's an up close candle. Price broke it, then use it to go lower. You get. So for a bearish, for a uptrend now, sorry, we are in the uptrend right here. For an uptrend, you want to see all those bearish candles to push price to the upside. All of these bearish candles that are down closed candles, you want to see them pushing price to the upside. Once you see that on the chart, it completely tells you that, oh, this here is a downtrend. Sorry, it is an uptrend. But look at all this bearish candle. Price sold, closed bearish, then what? Expanded. Price sold here, sold, selling, then what? Expanded. That's exactly how it is. For this bearish side, you have the up close candles, all those up close candles. See that we have up close candle here, which are bullish candles. Price broke below those up close candles. Then what? It turns back and use them as resistance to continue what? To continue going lower. Once you see that here, you're saying what? We are creating We are creating lower highs, lower low. We have another up close candle here. Then price broke this low to the downside. So you have what? You have high, a lower high, lower low. Then what? Another lower high again. Yeah. Then what? Price violated another low again. So all these up close candles become your resistance level. Price will trade back to them, then sell again. Price will trade back to them to sell one more time. And now by looking at this level now, by looking at this price action, you will know that price is a downtrend by just looking at the chart. Because why? You have all these highs. All of these highs are intact. Price doesn't break all of these highs. You see that the highs are clear. The highs are clean. All the highs are clean. All of the highs are clean. No high that is being run here until well, this is the first high that was violated. This is the first high that was violated. But look at it. Price kept breaking lows. Price kept breaking lows, violating lows. Price kept on violating lows. That is what a downtrend. So the lows are being violated. For a downtrend, the lows will be violated. The highs will stay intact. For an uptrend, the highs will be violated while the lows will stay intact. And that's exactly how you identify an uptrend, institutional order flow. Uptrend or downtrend. An uptrend or a downtrend. So if you have any question, you can type it in the chat box. We have 9 minutes. This is actually the basic market structure that you see that I just showed you guys here. Identifying an uptrend is you see the highs get violated. The highs, every high will be violated because the highs are weak. Whenever highs are being violated, it tells you that price is willing to continue going high. Well, whenever a low gets run, that there is the first signal for you to be like, oh, I should stop looking for buys and what, and you start looking for sells. So I think we'll change the classes to twice a week. We change the classes to twice a week, and yeah, I will notify you guys when the classes will be. But this is actually the first class, the basic market structure. So on our next class, we'll go into deep market structure, where I'll show you what a break of structure is, what a market structure shift is, and yeah, that's actually it. So whenever you hear institutional order flow, like whenever you come on the chart, the first thing that you have to do is to identify your institutional order flow. That's the first thing. How do you identify the institutional order flow? You look at the chart and see what candles are being violated. If you see up close candles, if you see bullish candles are being violated to the upside, every bullish candle is being violated. Every bullish candle is being violated. That is an uptrend. That's when you see higher high, higher low, higher high, higher low. But whenever you see an up close candles resisting price, like up close candle, bullish candle stopping price to go higher than it. And you see down close candle with bearish candles are being broken to the downside. If any bearish candle is being broken to the downside, that is a bearish order flow, bearish institutional order flow. That is a downtrend. That's why you see price making lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Let me show you guys current charts, and let me see. Yeah. So now we have price. What price did? You can see that right here now. Let me go to a different charts. Yeah. So you can see that now, whenever I just come, this is a 4-hour time frame. I'm just looking at this chart. What did I see? I'm seeing this down close candle here. This bearish candle is what? This bearish candle got violated right here. Price broke below this bearish candle. That is what? That is a downtrend. But look at the up close candles. The up close candles are staying intact. We have another down close candle here. This bearish candle was what is being run right here. It's failed. Then look at what? When this bearish candle failed, we have this up close candle here. Then this up close candle, what is used? This up close candle is used to what? To push price to the downside one more time. Now this up close candle push price to the downside one more time by breaking this down close candle, this bearish candle here. We broke this bearish candle again, this one. We broke it. So you see that this bullish candle leads to the break of this bearish candle. That there is a downtrend. So now what do we have? Look at the highs staying intact. The highs stays intact. The highs are staying intact. Look at it failing to go above the high here. The highs are staying intact. Now we have these highs, and what price did is about to create another low right here. So when price creates that low down there, it will come back, and this up close candle, this bullish candle will resist price. It will not allow price to go past it. If this trend is to remain bearish, if the trend is to remain bearish, then this up close candle here will not be violated. It will push price to the downside. But once this up close candle is violated like this, that's when what you stop looking for sells no more. You now be okay. Now let me see. There will be this down close candle now. You now be okay. Now let me see how this down close candle will react. Because this could be a stop hunt. So what? You now price come down here. Then what? You see price moving to the upside. Then breaking another high again. Once you have that, then you start looking for what? You start looking for buys now. Because what? All these highs will be protected. This high will be protected. This high will be protected. This low will be protected. This low will be protected. And what? Price will. You can see now that all the bullish candles here will be what? Will be violated. This bullish candle will be violated right here. And what? All the bearish candles are supporting price to the upside. The bearish candles here, you have a bearish candle here. So price will now have what? Price violated this bullish candle. Then what? We have this bearish candle here. So what do you expect? You expect price to come down to this bearish candle, and this bearish candle should push price to the upside to what? To break this bullish candle, to break another bullish candle. That's push price to this down here. That what? This is an uptrend. This right here is an uptrend. Vice versa, you have this bearish candle here that is supposed to push price to the upside, and price comes down, price trades down, and what? It violated that candle there. that there is a signal to what, okay, I'll start looking for buys. You will now be what, you will now look this high here. Sorry, yeah, this bullish candle, you now be okay. If price is to continue going higher, then it should violate this high. Then this will be classified as what, a stop hunt. But once this, but once this bullish candle resist price and price broke another what, another bearish candle here, and price broke another down close candle here like this, that's what, the trend has changed now. You have what, you have downtrend. So you now be what, you now start looking for sales whenever price comes down to a, comes up, whenever price comes up to this level, you now what, you now look for sales to what, to violate another low. Yeah, to violate another low, to violate our another what, another down close candle. So now in this level now, whenever I come chat and I see something like this, I'll say now, oh, now this is a what? A bullish trend. This is a bullish institutional order flow. Why? Because highs are being violated. But the same thing here. This is what, this is bearish, lows are being violated. So that's it. Actually, the Zoom will end now, and I will upload